Good evening, friends. I am K. Gupta here, Director Research in India, your host of this webinars. We are really thankful to all my participants and all the eminent speakers who joined with us to discuss the important topic of today in green financing solutions, a popular choice for the venture capital funds. So this is our 139th webinar under the series of Research in India. And we also hold webinar under the series of Association of Financial Advisors of India, where I'm also director of the associations. So this webinar will prove to be very useful for the listener, for the participants, regarding the green bonds or greeners. When we are talking about the green finance, it is not a green piece or something like that. It is facilitate and support the flow of financial instruments and related services for the development and implementations of sustainable, when we are talking about sustainable models, investment, trade, economic environments, and social project. When we are talking of the ESG, that is environment, social, and governance, these are the instruments which play a very important role in recent budget which were announced. It is envisaged that under the green energy transmission to get 35,000 crore rupees push. And when we are talking about the powering up the energy sector, it is envisaged, it is allocated for the energy sector 70,936 crore rupees against last year 53,696 crore rupees. It is also aimed by the country to achieve net zero emissions by 2070. So India needs rupees 162.5 lakhs crore rupees. You can say USD dollars 2.5 trillion till 2030. And Indian rupees 716 lakhs crore rupees. When we're talking about the US dollars, it is 10.1 trillion to achieve the net zero emissions by 2070. Now we're talking about the various challenges being faced to achieve. Whether you're talking about the higher cost of borrowing, we're talking about the false claim of environmental compliances, definition of the green finance, maturity mismatch between the long terms, green investments, and short term interest of investors. So we are going to discuss in the details about the current trends of venture capitals, funding in green financing solutions, the challenges venture capitalists face in financing green solutions, way to boost investment in venture capital funds in green financing solutions, the need for shift in existing regulatory framework. When we are talking about the green financing, we are talking about the waste processing and recycling. We are talking about the climate change adoptions. We are talking about the renewable energy, other climate changes, energy efficiency, water sanitations, and industrial pollution controls. That are the major aspect what we are talking about. We are not talking about the green energy or green financing in respect of renewable energy only. So we are with us, Shri Jonathan sir, who is a director in Impact Partner Impact Investment Exchange. He is a fund management, treasury investment banking expert with 8+ years of impact investing and development banking experience, with a passion to impact the world positively through finance. He is a global shaper representing the Colombia Hub, an initiative of the World Economic Forum. He is also one of the founder director of National Advisory Board of Impact Investment in Sri Lanka. He also holds a Bachelor of Commerce, majoring in accounting and finance from the Monash University, Australia, and Australia Award receptions in business management and CFA level of Mr. John, Economic Forum, CFA Institute, USAID, Impact Alpha, and University of Vancouver. I think, Mr. John, just I'm asking you, what are the current trends of venture capital funding with respect to green financing solutions? So what we are green financing solution, what you also talked during our preliminary discussion with you, it is not confined to the renewable energy. We are talking about the social, we are talking about the environmental and other aspects also for the green energy or green financing. Have any thought on the subject, Mr. Joy?
Yep.
I hand over to Mr. Please.
Sure. Thank you, Mr. Gupta, and thank you, Restructuring India, for this invite. Good evening to everybody. A very good question. So I'm not going to be calling it green financing. So I'm going to be naming it impact financing, because when it looks at green financing, most of us, especially in South Asia, at least, we think of it in clean energy or renewable energy. But when you look at green solutions, now there's a lot of solutions in the space of circular economy, recycling, agriculture, farm, food, value chain, etc. So I think there is the environment is so wide now when you call the green solutions or impact solutions. It's earlier, I think, when it comes to the earlier, I would look about 15 years ago. When you look at green solutions, we would only look at hydropower, solar power, etc. But now when you look at green solutions, it's across the value chain. So energy sector is only one sector. But in addition to that, if you look at the entire agriculture value chain, there is from the inputs for the agriculture space to food as well. So there is now alternative proteins as well, which is also contributes to green energy, green solutions as well. It removes the carbon aspects as well. And also there is also in the technology space as well, especially when it comes to carbon credit exchanges, now plastic credit exchanges. Most recently, I was introduced to biochar exchanges as well. So I think the space is very wide. If you see, the opportunity is very unique as well, because if you look at most innovations happening in the world, at least in the last decade, I would say, is in the green energy space. Because if of course there is innovation happening in the technology space, but if you look at the world needs actual green solutions for us to thrive for the longer term. So I think people are looking at green space in terms of innovations. So henceforth, funds realizing that there is this opportunity in this space are now having a side of their VC arms, or at least their funds arms, or in PE investments into the sustainability space or the green space, because there is a lot of opportunity in terms of both return and in terms of opportunity in the future as well. So in terms of numbers, where do we see at least? So in terms of, based on my last research, I think 88% of the most recent VC funds are looking at launching a sustainability or impactful VC fund. So which is really credible. And also, if you look at even big funds like BlackRock or the bigger funds, they're also having the impactful or sustainability arms being launched, which is a point of concern for a lot of the other VC funds as well, because they do depend on their LPs, which are looking at impact goals. So because of that angle, a lot of VCs are now venturing into the sustainability space or VC space as well. And as I said, most innovation is also happening in the impact and sustainability space as well. And also, when we talk about sustainability space, there is a lot of financial innovation also now happening, where you could repurchase some of the future cash flows. Example, clean power securitizations, wind power securitizations, which is also another avenue for companies raising money. So which was not available earlier, but now I think with a lot of new technology, especially even farmers using solar power, renewable energy, companies have alternative users of cash flow as well, where they can pledge their future cash flows earned as well. So I think in terms of VCs, they are looking at more sustainability investments as well, because when I think the past stage, people only used to think when it looks at sustainability space, it's only impact oriented. But now I think when it comes to sustainability, the returns are far more better than some of the non-sustainability investments as well, because it offers both financial plus impact gains. So I think people are wrong when they say that impact opportunities or sustainability green opportunities don't offer good returns. They do offer good, stable, short returns as well. So that's my opinion.
So very nicely you are told you are also the initiative, the World Economic Forum, something like that. How the world, you can say, even when talking about the Singapore or a global fund, something like that, how they are helping the startup? Have any view on that?
Yep. So, so one thing which so the organization which I'm part of, is there is a global effort going on, right? So if you look at IX, we have the world's first social stock exchange listed women's livelihood bond, which is USD 170 million, which is listed in the Singapore Stock Exchange. So when I always say, when you look at the sustainability space, you cannot do it alone. You need an entire village to support you. So when it looks at when we launched the bond, one of the key supporters of the bond was the US government for that. So they actually came in as a first loss guarantor to our bond, which allowed us to get more private sector investors. Because if you look at this, when you're actually helping impactful companies, a lot of the private sector investors are quite scared when you're looking at smallholder farmers, supporting them or giving them access to finance. So we got the US government to come on board to our bond as a first loss guarantor. So even they are looking at more collaborative opportunities, because it offers both return and impact as well. So I think world is also now moving towards in the sustainability space. They are realizing that through investing in the sustainable opportunities, rather than giving free money, giving investments has both, you're able to scale the impact plus in sustainable returns as well. So early, I think, especially in the developing countries, when you look at opportunities, there's a lot of grant money which is being doled out. But now a lot of these entities have realized that rather than giving grant money, giving them as the investment has a long-term impact, because you're able to invest in sustainable companies which has both impact and financial returns as well. So you can scale the solution more towards the longer term rather than having a very short-term impact.
I think you have rightly covered something that when we are talking about the concurrent agreements 2010, where they have to mobilize some developed countries, some funds to invest in the underdeveloped countries, just like Singapore is a developed. So, have any funds has been created at Singapore or any other places to invest in the underdeveloped countries? Have
Very
any?
much so. So actually, even our one IX growth fund, it is primarily looking at investing in the underdeveloped countries or least developing countries like Bangladesh, Nepal, Cambodia, Laos as well. So there is definitely a lot of funds being opportunistic and placing their interest in the developing countries as well, simply because there is a lot of opportunities for the market to grow, and especially using technology as well, not only at the typical high-tech fintech level, but using technology in the agricultural space as well.
So my point was that when they are investing in a developed country, where India required, as per Prime Minister, 1 trillion rupees they require every year.
I think in terms of the Asian market, I think India is one of the largest recipients of this impact capital today, if I'm not mistaken. So there's a lot of funds who's out of Singapore who have their sub offices in India, and India, if I mean my is in personally is one of my favorite markets because there is a lot of potential in India, in terms of sustainability space as well, especially in terms of innovation and driving. So I've seen most innovative things happening, at least in Asia, in terms of impact space in India and Indonesia. But India is definitely ahead of the curve, and sustainability funds are definitely putting their money in India. That's for sure.
I think you're right in that respect. The only main point is whether these funds can go to a small person. If you're a trader or you're talking about the social development, you're talking about the environment development, what you're talking about the energy, renewable energy, such fund can go to that sector also.
So that's the issue, right? So when it talks about impact funds, they don't want to deal. This is typically even with PE funds, right? They don't want to directly go and put money in a micro merchant.
Sure.
This is where the real problem is also, as you
Uh,
know, right?
that's why we are
But
here to talk to you,
yeah,
very
yeah.
frankly. That's why
So
we are open batsmen.
yeah,
What are the
so
problems? How it can be, you can say, set right?
yeah. So if you look at still a lot of impact funds, you would have heard the topic of greenwashing. A lot of the impact funds, primarily their goal is just to invest in a venture or even a MFI, and then the MFI in turns invest in the micro merchants. They don't want to take the financial risk, right? So that's one of the key issues, I think, in the developing countries, where the actual impact funds or the sustainability funds do not want to directly invest in the low, high risk ventures, or I would say the bottom of the pyramid ventures, which has direct impact, but they want to go through a follow through mechanism or a conduit rather than going directly. So I think that that is something which I already deliberate, because I'm also from Sri Lanka. So I always deliberate with a lot of these impact funds, because why they can't take the direct risk, because they don't want to. So because it's cumbersome as well, like the local laws doesn't allow them to hold any guarantee, even like collateral or execute a mortgage. So this is still up for debate. I would say a lot of direct, actually, they would be able to see direct impact if they do directly invest in the company rather than going through a conduit like a MFI or a big bank, who would then, what typically happens is, like these big impact funds would give about 20 to 30 million dollars to a big bank, and the big bank would use that money and lend it to the micro merchants or the micro entrepreneurs. So which the impact is actually debatable, because you can't actually evaluate the impact.
Very nice, John. Like a major issue is in India also we're talking about the green bond, thinking that is a sovereign bond guaranteed by the government. So without guarantee, something can be done for that, because when the government of India or banker or banking sector float some bonds, that can be subscribed because they are the investor, they knowing that it will be returned back.
Correct.
Because all the bonds are also type of a debt instruments.
Yeah.
So point is here is whether this market will develop or what is the opinion, without government guarantee or something like that?
No, I think there is now opportunity. So like example, like if, especially in the green space, right? People who are doing solar power, renewable energy. Let's say I worked in a company called I cannot mention the name for confidential purpose,
No,
but
no,
it was a,
please
yeah,
don't
but it
mention
was a,
it. Like just
yeah,
we have a thought
yeah.
experience for that.
Yeah. So example, I worked on a company in Indonesia. So basically they do shrimp farming, right? So they do shrimp farming ponds in one of the cities in Indonesia. And this company, the startup actually develops a software which monitors the health of the water of the shrimp farm. So the company basically, their key revenue source was, of course, developing the machine and giving to the farmers. So we came up with a solution how they could create access to the farmers. So this company was a startup, right? So one of the biggest issues for startups is innovative access to capital, right? So we came up with to them and said, okay, you give the machine to the farmers on an installment basis, but because of the through the machine, they're actually able to predict the yield of the farmers' future cash flow, right? So we actually structure the securitization against their future cash flow, allowing them, the company, to borrow against the future cash flow which the farmer generates maybe in 2-3 years time when the prawn actually comes to maturity. So allowing the company to borrow and give this machine on installment basis to the farmers. So at the same time, the company gets a margin on the interest income, plus they're able to sell their machine to the farmers as well. So I think there is definitely innovation which can be used, especially in fintech, agriculture as well, how the cash flow can be played. So this is again not a company who's very advanced in terms of their expansion. This was a pre-Series A company who are raising money, capital. Yeah.
Very nicely, I think you have mentioned, you're talking on the defer payment system like that. Machinery can be available on the defer payment system, and you can also discount the future cash flow. I think these are the major aspects which our participants should understand how it can be useful for them, whether you can have a deferred payment machinery, what you're talking about, or the cash flow discounting for that. So now I'm coming. Thank you very much. I will come to Mr. Nathan again to you. Now I'm coming to Mr. Rohit West, who is the managing director of Fintech Capitals. Rohit is active in space for nearly a decade and made multiple investments in past, which include domestic as well as international deals. He is a learner, considered himself as a very risky averse person in a very risky sector. Coming from the family having multiple generations of entrepreneurs, he has a strong principle around finance, governance, management. His personal resolve to play the active role in creation of the new economic system that India would experience about a decade from now. He holds bachelor degree in engineering and master in management, entrepreneur and finance. He is also certified financial partner, planner for FPPV. Mr. Rohit Goel. Well, sir, just I want to from you, but make venture capital investment well suited for sustainable investment. How does the venture capital investment align with the needs of the sustainable startup? I think this is the most important aspect when we are talking about a startup. They are not getting the money because they have no collateral, they have no guarantee, they are nothing. Only their vision is there, what they want to do it. Whether such venture capital investments can play a role for a sustainable investments. Mr. Goyal.
Yes, absolutely, sir. First of all, good afternoon, everybody. Thank you, Resurgent India, for providing this platform and gathering a group of people who share a common interest. And this particular interest is quite close to my heart as well. Personally, I believe sustainability or impact or green or whatever label you use, that and capitalism are not actually separate, but are two sides of the same coin. Simply because capitalism teaches us that tomorrow is going to be better than today, and sustainability ensures tomorrow will be there. If without sustainability, tomorrow won't exist, and hence capitalism also cannot exist. Now, with that in mind, I believe as a VC, my whole idea to begin my journey also was, what is the best way to identify and determine how the economy of tomorrow looks like, And the idea was if everybody's interests can be aligned towards doing something positive, it can be do. And the fastest way of aligning interest is put capital on the table. And that's I think primarily the biggest role that I see VCs can possibly play in this whole impact game, is ensuring capital is allocated to the right companies, which are then furthering impact. And just allow me a couple of minutes to sort of talk a bit more. Uh, well, when we talk about impact financing or sustainability financing or green financing for that matter, most of the time people refer to the debt component of it, right? And hence we talk about guarantors, we talk about collaterals, etc., etc. While that is there, and that definitely does help and support larger mature players out there who have a sustainable base, like even like what Mr. Jonathan recommended, right? A revenue based financing or debt which is repaid by future accruals, is something which VC and industry has embraced already. It just has to be applied to the impact segment as well. And now, what happens? You'll see there are plentiful of funds which are structured as either debt, venture debt fund, or even revenue based financing funds nowadays. And I think there is a lot of capital available for companies like these. The larger challenge, I think, what was being discussed earlier also, was about who takes the risk, because the people with a larger sum of capital do not want to take a risk. I personally believe it is not as much a concern of risk as it is a concern of size. Somebody sitting with $100 million finds it extremely inefficient to be able to write checks which are 10,000, 20,000, $50,000 in size. So it just becomes about the distribution as a challenge. Now, I see VCs playing a pivotal role over here, because VCs can be that sort of that management layer in between, wherein, let's say, there are investors or government funds that and institutions that want to deploy huge sums of capital, and at the other end there are smaller companies there whose funding requirement, capital needs, are relatively much smaller than the amounts that are being earmarked, right? Whenever we talk about green financing or this, usually the numbers are in billions and trillions of dollars or rupees or whatever unit we use. It's usually a very large sum. Now, it becomes difficult for, like, even if any one company to absorb even 1% of that allocation, right? So suddenly what then has to happen is it has to trickle down to smaller size, spread between multiple intermediaries like banks, VC funds, and other institutions, other development finance institutions, and then they in exchange end up lending to smaller ticket size or smaller companies. So I believe while the role is pivotal, there is still a lot more scope. I'm very happy to see off late majority of the VC funds have some or the other impact angles to it. We as a fund within our portfolio have been tracking the impact metrics of our portfolio companies since quite a few years now. And even though we do not label ourselves as an impact fund, because I genuinely do not believe that there is any differentiation between impact and non-impact companies. Both can be equally profitable and equally sustainable.
Very nice, Mr.
Yeah.
Goel. Yes, please carry on.
So I just wanted to answer, in sort of summarize my answer to it, is primarily I think VCs can help solve the risk and the size challenge when it comes to green financing, and maybe not for the debt part of it, but for the equity part of it for sure. So when any capital is allocated for the equity side, that truly attempts and enables new technologies to be developed as well. And just one closing remark, I believe there are a lot of good sustainable technologies out there. We should look at investing not just in sustainable technologies, but also in ensuring that those adoption of those technology gets accelerated, right? So accelerating the adoption of sustainable technologies should actually be also be a sort of an impact activity, so to say. And I believe capital, whether it comes from a VC or through a debt fund or through any other channel, capital can really help push things through and accelerate it at a increased space.
If you have seen the budget recently announced by the Honorable Finance Minister, which they are telling if this Fintech company can play a very, very important role under the green finance. Have any view on that, Mr. Goel?
Yes, I do. There is a underlying justification for that, as So India's fintech journey has been phenomenal and outstanding globally, right? We've been able to build our financial services on a technology stack that enables seamlessly to do transaction as small as a single rupee to transactions which are like much larger in size as well. Now, here I believe what basically the fintechs have solved for is the whole size challenge, right? And which again you can see even in microfinance institutions, in peer-to-peer lending entities, and a lot of other companies that are offering one or the other type of financial solutions, where basically the value comes from going deep and going small, like smaller loan sizes or smaller disbursements, but through a much wider audience base. So that helps in both managing risk also as well as creating sufficient impact at the same time. So as I was talking earlier, that I think it's not just the challenge of risk, it's also a challenge of size. Fintechs have positioned themselves in a manner where they are the best suited to solve for that micro markets where smaller loans are required or smaller money is required.
So there is one question for you, Mr. Goel. If you have some village, you feel that you can have the solar village, you can define it and invest in something in solar village, because this is a very green financing aspects, because solar energy is also important issue. Have you thought in that respect? If you belong to some place, you can say some mohalla or something like that.
No, absolutely. So coincidentally, in my own, not as my organization, but personally in my own capacity, I do have some assets into solar power generation, and and that's like a passion for me also. So I've studied quite a bit in it, and I have a very close friend of mine who runs a solar EPC company. So we keep exchanging notes and discussions. While a solar village on paper is possible, there are two type of challenges for that situation. Villages typically require energy at night, and that's when solar isn't working. That leads to a lot of you have to build up a capacity for storage. Now the moment you start factoring in the carbon footprint of creating batteries and that size of storage, you'll suddenly realize that while it at the operational level it might look like a green operation, all we've done is basically just exported pollution out from that village into some mine back there, which has been extracting precious metals to make the batteries which are required, or to make the solar panels that are required, right? So while solar village sounds like a good idealistic concept, it is not really a very green, may not be the greenest solution out there. Having said that, solar is a very good source of energy. We need to sort of scale rapidly on the same. I believe our honorable prime minister has also laid out plans to reach 100 gigawatt type of capacities in the near future for the same. But it cannot be the only power source powering any particular operations. So a combination of solar and wind, solar, wind, hydro, so on and so forth can act as a much better, stable green solution overall.
So what I feel it, why as a financer also, because we are in research in India, where
Yes.
we are arranging funds for our venture people or some entrepreneurs. So there are so many challenges where we are approaching the venture capital forms. They are telling there are so many in greenhouses, green energy, or green financing. There are so many challenges. You feel that
So,
some problem are being faced by the venture capital to financing the green energy or green
no,
finance?
I actually, there are challenges. I agree. I do not deny that. But I think most of the challenges are happening because of one of the two issues. First, this whole definition of green uh, is a gray area. It's not white and green. It's a gray
It is
area.
not properly defined. It's not properly defined.
Yes. So even as we can see on this panel, we are using terms like impact, we're using sustainable, and we're using green. We're using all these terms interchangeably. So suddenly, because even at UN level, like traditionally earlier, there was an ESG ecosystem and environmental, social, and governance. But now even UN has moved to SDGs, Sustainable Development Goals, which are not really overlapping pieces. So I think one side of confusion is what qualifies as green, and even VC funds get into a lot of back and forth with government bodies, etc., just to ensure that can we have a clear classification. So I think one part of the challenge is there. The other part, which is more external or which is more towards the company, is, and I would not say it's a problem. I just think that this is a misalignment over there. Usually, and more likely than not, entrepreneurs in the whole impact on the green ecosystem are very emotionally driven, and they're extremely passionate about the projects that they have undertaken, which is a very good thing. But at the same time, one also has to understand why is a VC writing a check, right? So, so it's the VC's job to sort of be heartless about the thing and also evaluate it purely on the numbers and financial merit, right? Now, a lot of times, in my own personal experience, I have seen the founder losing interest in partnering with a VC the moment VC start talking and spending more time on, okay, while you can scale your operations and impact in one way, how will you scale your revenues and your bottom line? Let's also talk about that. And suddenly there is, because these are very passionate people, passion driven people, uh, for some reason, for some of them, it might be that, okay, thinking about profits is a wrong thing, or there is some preconceived notion around it. So I think that is a mindset change which sort of needs to come. And I truly believe there is no dearth of capital. Uh, Access to that capital is not easy. I completely agree. A lot more can be done in increasing access to that into the impact capital. But there is no shortage of impact capital, and there is no shortage of companies and entrepreneurs working in the impact domain. It is just about how we tend to align these two, like that funnel and conduit needs to be made more smooth, which is where even people like Resurgent India come into play, right? So there is a lot of information confusion. People don't know about right avenues. In fact, even me as a panelist, when I'm participating, I also get to learn. There's some new information I capture on every panel that I am in, which even we were unaware of. So if people if people in the industry also do not have full information, how can you expect people outside who are busy doing their regular day-to-day businesses and actually creating impact on ground to be updated upon what's happening on the whole regulatory and the structural front?
Very
So
nice.
yeah,
As
yes,
per
please.
research in India, what my experience goes, it is a mismatch between long-term green investment and short-term interest of the investors. Have any view of that?
Uh, True, sir, but that is changing. So as even Mr. Jonathan was mentioning earlier as well, that more and more patient capital is becoming available. So while traditional VCs, yes, the capital isn't as patient, and impact investing suffers from challenges of size and long gestation period. And that's a known fact, simply because for somebody, something or someone to create a large impact, it has to be given that much amount of time. Like there is no way one can compress time, at least not yet, in order to be able to do so. So that I think is a primary challenge. It is not that capital isn't available. There is capital available. You speak to people who have a lot of capital allocated for this, and their problem is we don't know where to deploy. And you speak
Very
to
nice.
people
If I
on feet of shit, and they're like, we are short of capital. It's the matching of the two that is missing, I believe.
Very nice. If a lot of capitals are available, they know depth of the capital. I think that we can achieve the target which is set in 2017 before that also. Because capital is the main instrument. Have Jonathan, you want to say something? Jonathan?
Yeah, I think adding on to Mr. Rohit's conviction. So I think even I recently were working with the Impact Fund in Singapore, who was looking to invest at least close to about 30 to 40 million USD, and India was one of our critical countries. One of the biggest issues was we couldn't find good pipeline companies. So though we did our outreach, one of the biggest issues is pipeline, investor-ready companies. So at IX now I see a question like what kind of support which we bring to the companies. Before we actually work with the companies, we do a technical assistance program where we actually make the companies investor ready. So even that's also a big issue for a lot of companies. They don't know how to raise capital. What are the expectations in terms of investors? What are the expectations in terms of impact investors? Even traditional VC investors, like even a lot of startups, they don't know the importance of even having why do they need to do audit? I have proof of concept. Like those are very important things when you look at a startup. Like a lot of people think, okay, I have an excellent idea, but then again, to take it to the market, there's so much things to be done, and creating so much of I would say in terms of preparedness is very, very important. Like I think recent things which has happened in the world has proven to us that a lot of startups aren't ready. Though they have got a lot of capital, they have a lot of mismatches, which actually puts a lot of pressure on current startups raising capital, where the VCs actually do a very long tail due diligence, which takes to about 3 to sometimes even 6 months.
Very nice. Mr. Jonas, there is one question from J. Chaudhary. I think this is relevant to you. How does your firm support portfolio companies?
So,
Investment?
yeah, so
And
two
what
ways.
kind of resources do you provide them?
So we
Yes.
normally take a long tail approach with all the companies which we support, right? So we, for a company who's normally entering like Series A, very early stage, we give them the opportunity to go through our IX growth fund, and which is more on the lower ticket size, and then we'll take a long tail approach with them because we have a higher ticket size fund as well, which is up to $1 to $10 million. So we take a long tail approach, like it's not just investing and just taking it off from there. And one of the other things which all our funds we do is, and the support services, we do a quarterly impact verification of the companies. So which allows the company also not only to be, impact, work on the company, we actually verify their impact as well, updating with to which Mr. Goa said, like the impact is very, very important to us. So because of that, we actually verify the company's impact each quarter, so that from the time we made the investment to up till maturity, what is the impact, we can monitor it continuously. And most of our instruments, even debt instruments, the repayment is at the end. So it's a bullet repayment, allowing these companies not to pay the repayment quarterly or semi-annually, which puts a lot of pressure on the companies as well, especially when it comes to impact, right? So which allows them patient capital to expand their solution, where they only pay the interest, and giving them a long time to use their money to scale the startup or impact, and repay us in maybe 3 to 4 years back. So,
Well, when you're talking about the payment of the interest because they are not earning anything, how they will pay the interest?
interest can be structured like interest is going to be a very small portion of their cash flows, right?
Okay.
This is I would say the debt instrument is not going to be for companies who's not cash flow positive. But the debt instrument is only for companies who are cash flow positive.
Okay. Whether the interest can be restructured in financing?
Interest
Can be restructured. That means you can take a part of the cost as a interest also.
So we come across a structure where if the company does well in terms of impact, we can reward the impact. So that means, let's say the interest rate is 9 to 10%, which was agreed in the agreement. But if let's say they early agreed to maybe save, maybe impact 10,000 women farmers, whereas if they do achieve that in, maybe we give them a target of 3 months, or maybe let's say 6 months for example purpose. But if they do achieve in 3 months, there is a possibility of giving them interest reduction, maybe about 200 basis points or 150 basis points, allowing the company to reduce their increase their impact plus reduce the interest rate. But restructuring interest rate, I haven't come across the concept, but yeah, so that's something I had to think about. Yeah.
Thank you very much. I think very intelligently you have handled the question. Now coming to Mr. Surya Prakash. He is CTO, Ideas Springs Capital. Mr. Surya Prakash is currently CTO of Ideas Spring Capital. He look out into the new investment opportunity as well as assist portfolio companies in their operation. After building compiler and networking software in Wipro, Infotech Research and Division for the close of decade, he has a co-founder 3 startups across multiple domains such as networking, healthcare, education. The 2 exist. He is part of the Indian startup ecosystem and entrepreneur mentor, advisor, investor for the last 20 years. I think Mr. Surya Prakash, you are the inventor, you are the startup. Now, what type of you feel a startup, how you can help a startup? Either in case of a finance or technical, because you are a technical person. So how fintech company or technical uh, can be envisaged so that the growth of the startup. So I hand over to Mr. Surya Prakash. Surya Prakash, sir.
Hey, good evening, everyone. Thank you, Mr. Gupta and Resurgent India for inviting me for this. I'm happy to hear uh, uh, yeah, inputs from the other panelists. Uh, Coming to technology, right? Like, so being a technologist, like, what we look at, like, how do we, when we even started thinking about launching Ideas Spring Capital, like, we had these things in our mind. India has a lot of technology talent and ability to build products for the world. What they need actually, like, and many of these guys are first time entrepreneurs, so just giving money is not enough. That's why actually we came up with the theme of investing in B2B product innovation startups, but just not investing, but also we run a program called Startup Assist, where we help all these portfolio companies in various ways. Basically, since we invest in technology founders, they know the technology mostly, right? But how do you build a product? What to build? What not to build? How to prioritize? Right? It's having technology is one, but building a product which is solving a problem where people are ready to pay money is very important, right? That's what is business. That's what is startup. It's not just technology. So whether it's connecting to people like enterprises or helping them in building the story, right? Like how to put it across what they have done. These are some of the areas we actually help them out, and also connecting to various ecosystem players. So that's where we come in. So because of this, we usually invest only in 4 to 5 startups because we can't do more than that. If we do more than that, then we lose that hands-on approach, right? So that's where actually we come in. Um, and in this panel, maybe I am the one who actually is not from a impact fund, or neither from an impact fund nor from a sustainability fund. But we have made investments which are related to, I would say, sustainability. Not because we looked at it as sustainability startups or impact startups or climate startups. We looked at them as good technology startups. Okay, so that's how we actually like look at the startups. I will give some couple of examples of the companies we have invested and then what they are doing as we go along.
But Mr. Surya Prakash, you have work and I think new investment opportunity as well as assisting the portfolio companies in their operations. How you are assisting? You
So
can
so like the so let me give you a couple of
decide
examples.
what I'm talking about, whether you're technical or technology के अलावा what type of help you can provide to a startup.
So I'll give you I'll tell you about some of the examples, like so
Yes,
that you
please.
get an idea.
Please.
Let me give you an example of a networking startup we have invested. We knew that even though building the product is one thing, but deploying it is very tough because these devices are deployed in places in, say, retail outlets or in banks where there is very less IT help, right? So we were able to actually sit with the portfolio, the founders, and say, how do we address this? How do we scale the deployment, right? So that's something which I had faced in my own startup. So based on that experience, we came up with uh, the methods on how to build this product to make it deployable
Hello. Yes, please.
2,000 branches, right?
Yes.
During pandemic. So that's one example. There have been examples where we have got some of these startups the first customer because of through our connects, right? So things like that. Yeah. So basically, wherever they need help, we actually we either give it directly or get experts who can help them.
Mr. Surya Prakash, you have handled, co-founded 3 startups.
Hmm.
So any difficulty you faced in to have a startup, either in race of a technology or in respect of the finance or marketing or infrastructure?
Hmm.
Any personal experience with the startup?
Yeah. See, in some of the cases, like let me take the last startup which was in the education space, Funtoot. Couple of problems, not problems, challenges. I would say challenges faced would be, yeah. The thing is, like in India, network is not really like very robust. So we had to build a solution which works, which has two versions, right? One works in the school and in the on the cloud. And how do you sync up this data? Because in maybe in the US this is not a problem, but India specific, it's just you go out of Bangalore, maybe like network is intermittent. So things like that. So sometimes you face those technology problems, right? So that is there. And the other thing actually is, see, like in my first startup, this is not a challenge, but the advantage is to build a solution which actually is immediately needed in the market. That makes it very easy. Coming to funding, I would say we were very lucky. In my first startup, we got it before we started. In the second one, we built the prototype and got it in about 3 months. In the third one, actually, like we ourselves decided to actually get some revenue and then go for funding. So that way, I've been lucky in getting funding in all my startups. So and also 2 exits, which is like which is good. See, as long as if you can understand what the investor is looking for, right, in funding a startup, but I think that makes it easier. So you have to look at it from the investor's mindset and present your solution that way. That's where the trick is.
There is one question of Mr. Arun Bhandari. The crux of the things are, what are the key initiatives in long-term vision planning? I think you are a planner. You also done so many startups. Have any initiative in long-term vision? Have anything in your mind which you can guide Mr. Arun Bhandari?
See, long term. See, every startup has to have that vision, right? What we want to reach,
Right.
and also what it can be multiple things, right? What's the kind of impact meaning it's not social. It can be social impact or it can be other impacts, right? So when I actually like did my third startup in the education space, the thing is to show how you can use technology to scale education. Okay, basically like how can we impact a lot of people get over the fear of math. That's what we actually like had the vision, right? And go to schools not only in cities but also tier 2 tier 3 cities. So how can we enable, just to give an example, my dad was a teacher. So in every year maybe he would have taught maybe like 1,000 students over 30 years, but the product which I built enabled so many students. Like even if you take 1,000 students in 200 schools, you know the numbers, right? So that passion and that vision has to be there. Like, and why I'm doing this, right? So that's very very key. So it's more about what is the bigger problem you are trying to solve. Like in case of say Idea Spring Capital, our thing is to see how can we enable, because when we started Idea Spring Capital, there were very few B2B focused funds. We said that is what we want to solve. There is talent, there is ability to build products. So when we were building our own startups, people helped us. So here we said, okay, how can we do it in a structured way where people will build products and then actually get may not be unicorns, but like good sized exits, which helps the ecosystem where the founders will come back as investors, and that's how the whole cycle starts, right? There'll be more and more entrepreneurial activity because it's not just paper money, right? Finally, you have to have exits. So that's what we want to enable. Yeah.
Very good. Very nicely, sir. Sir, major question what all feeling is, Ankit Singh is also something is asking. I think that is pertaining to you. What are the steps for startup to raise fund? Because you have done so many things. That's why I'm asking you. What steps should be taken? Because fund is a major requirement in these days. Without fund, nothing can be happened. So what steps should be taken to get the money?
First is to actually people should look at the themes of various funds before they approach them. Because I will tell you, like we have more than 50% are applications which we get are usually not even relevant to our fund. They can be B2C companies. Okay, so that's a waste of time, and the entrepreneur also will feel bad, right? Hey, there is a no. Every no hurts. So, so best thing is to actually find funds which actually fit the theme of what you are doing. You once you do that, then actually, like, if possible, get a reference. That's another next step you can do. And uh, and see, like, it also depends on which stage you are in. Basically, when I see the theme of the fund, say, when, let's assume somebody is requiring a 5 million fund and they're already in series A stage, if they come to us, we'll say no, right? So you have to identify the stage, identify the theme of the fund, and what are the sectors they have invested in. And let's assume if they already have invested in a company which is very similar to you, many of the small funds like us will not invest again. So there's no, I mean, you have, then you present your case, right? So and don't assume. And there's one more mistake a lot of people do, right? Like, the thing is, let's assume we have said no. It's not a permanent no. At that point of time, we think it's no, right? And but keep the funds updated on what is happening. You never know, like, okay, there'll be if they see more progress, maybe they will come back to you. So that's always there. Don't take no as a, it's no forever. Okay. So these are some of the steps.
Very nice. Again, Mr. S.C. Agarwal, ask you whether you can invest some money in your village for a wind energy.
See,
Mr. Surya, can you invest in your village to make your village a solar come wind energy village? What he asking? S.C.
yeah,
Agarwal.
okay. So see, again, it's the theme of the fund, right? Let's assume from the fund, we invest in B2B product innovation startups. We are IT software kind of guys, so there is bias towards it. But actually, we have we usually invest in asset light and that kind of startups. Okay, so maybe it will not fit the theme of our fund because there is a lot of hand like on the ground work to be done and things like that. But the thing is, you never know, right? Like basically, if it makes business sense, and it's not too far from the theme of the fund, people take a look. Let me give you a couple of examples, like how we have gone about doing this, right? When we started the fund, we were investing only in software companies. Okay. So after 3 years, we said, okay, there are a lot of good work is happening in life sciences. So we invested in life sciences company. Okay. And then in this fund, we actually are looking at investing in couple more life sciences and biotech also. So I will give you a couple of examples where it kind of like also falls into the sustainability clean like areas of investment. We have actually like we'll be investing in a uh, enzymatic process, basically a protein engineering company, which helps pharma companies replace their chemical process by enzymatic process. It's we invested because it's great technology, and it's actually also helping pharma companies become green. But when I talk to pharma companies, like for referrals and things like that, what they said is having a green process is good, but if it is too costly, I will not adopt. Okay, it was very, very clear. So finally, all these companies have to make business sense, right? Either they have to reduce the cost or increase the revenue. Like that's bottom line. This is the business finally. Okay. So similarly, we took a look at spaces where, so let's take another example of a company called Smart Ship Hub, which we invested because they actually the maritime industry, they digitize maritime industry. So you have to measure before you can actually reduce carbon emission, any of those things, right? In maritime industry, they are still in the stage of actually like measuring things, like putting instruments, measuring, and there is also compliance pressure to go like more carbon neutral, like things like that. Like there's a long way to go. So the thing is, so most of our investments, which actually we can categorize as sustainability or clean, not energy, but like green space. The main thing is we have looked at it as regular businesses. We have not really looked at it as this is green, this is non-green, nothing like that. It's finally it all boils down to business sense. But technologies can scale, right? So that's the way we look at it.
Excellent, excellent, sir.
Gupta ji, if you allow, I just
Please go, sir. Please.
yes. Just one another angle and aspect I wanted to bring out. So while even if as VC funds we might want to and I'm saying this just to clarify it for the audience, right? VC funds are funds that have a specific investment mandate, and
Yeah.
we have to stay within the mandate as per SEBI guidelines, right? So unless if my fund mandates that I am going to invest in solar, as a fund we cannot invest in those in any other asset. So while a lot of people do think that, oh, if VCs have a lot of capital, it's lying around, why can't they not park it in solar or wind for the time being, or
Yeah.
since these are revenue generating assets, there is regulatory restraint on us. Even if we want, we cannot do that. So even in my own personal story I was sharing, I have personally from my own personal capital invested in solar, never touched my VC funds money to do that, just because my fund is not allowed to do that. So while even
Yeah.
if there is, unless a vehicle is being set up with a purpose to invest in solar companies, and the moment somebody sets up that as a purpose, then suddenly the kind of return expectation changes, the kind of investor pool that they have to raise money from changes. So it starts looking more like a impact investment debt fund piece, which again a lot of banks and NBFCs are already doing. Hence there is no dedicated VC for that, because there is a better solution available through the banking channels in the form of debt rather than form of equity. Whereas if there is a company which is doing innovation in solar technology, are creating better solar cells or some other inverters with higher efficiency. In fact, we evaluated a company that was helping monitor yields of solar power plants after they have been commissioned, and were helping using infrared vision to enhance productivity. Those things can be funded by VC.
Yeah.
But the solar project in itself falls out of the definition of definition of a startup which VC funds are required to invest in. So other than the will, there is also a regulatory angle to the answer I wanted to touch upon.
Yes.
Nice,
See,
Mr.
like
Goel.
the
I
other
think
actually,
you replied to most of the question, what they are asking. Rooftop financing, somebody asking for a finished. You, in a one word, you explain the regulatory framework is there.
yes.
Accordingly, as per the mandate of this venture capital, they can finance any project.
Yeah,
I
we are very much bound by that.
think,
Yeah.
yes.
See, the
So
other
now,
trick I
lastly, I'm
just
coming
wanted to.
to Jonathan, sir. Sir, lastly, have any advice to the listeners, sir? Because more than 750 people are listening to you.
Sure.
Have any last word, a few words?
So I
Which
saw
advise them?
there are several startups who has asked questions. What's the access ticket size? So we invest in companies between 1 to 10 million ticket sizes. Of course, as again Mr. Surya Prakash mentioned, just because we say you should not be heard saying that we rejected you. You should keep on knocking on our door and look at how you can improve your model and your business as well. So, and also there is lots of opportunities of innovative ways of raising money. Now the world is changing, so always keep on the lookout, at least how you could structure your instruments, how you could structure cash flows to raise money innovatively as well. So I think there is more and more capital to be deployed. Even I think there is a lot of macroeconomic issues going on, but I should say that though a lot of VC funds are narrowing down, I would say in the impact space, the capital is getting increased. So a lot of people are looking to increase more in the impact deals as well. So I would say keep on looking out. Yeah.
Very nice, very nice. Surya Prakash ji, have any last word? Any advice?
See, the thing is, coming to funding in this situation, if you are an early stage startup, there is still money. Okay, if at decent valuations, right? So the the startups which are already in growth stage have issues, like, because like people are very cautious, right? Early stage there is still money. One more trick actually, like I just wanted to mention that, which I missed last time. Because of the duration of the funds, sometimes companies which need long gestation periods get the answer as no. So go to funds which have just started. Let's assume, like, if you in our right now we are a 8+1+1, so 10 years, right? 9 to 10 years fund. So we are trying to look at investing in long gestation kind of startups now, because now we have time. Like, if you come after 4 years, you will not have we'll not have time, right? We cannot look at startups like that. So there are a lot of things which come into taking a decision while you're investing. So please understand from the investor's point of view also. They're not saying no to because you're a bad startup. It's that they're not the right investors for you. That's what I would say.
Very nice. Mr. Rohit Goel, anything?
I'd actually just, like, since a lot of companies were talking about raising money or how can they raise money. So I think every founder should treat an investor like their customer. How first you understand the customer need, the customer problem, and the customer limitations, and then you approach the right target customer. Uh, Having said that, I do understand and I acknowledge on behalf of the industry as such that we know that VC as an industry is not very open simply because the regulations themselves are new and are evolving time and again. So, if somebody understands that these three critical parameters, what is the focus area of the fund, what is the check sizes of the fund, and what is the timelines of the fund, as in uh, even about 80% or so of the deals that come to our table, we don't even look at or evaluate in greater detail just because it is not aligning with one of these three parameters. And it has got absolutely nothing to do with who the founder is, what the business is, and what area the company is working in. Those all come secondary. First, whether there is an initial alignment. And VC funds also tend to do so because we typically end up receiving 100 plus applications every month. Now, the resources that we require to evaluate these applications are also very expensive resources. So we look at optimizing time. And hence you will just get a simple no and not a detailed analysis of why somebody is saying no. But more often than not, the reason of no is just that you've not aligned with them. So my submission to founder is research your investors as well as you research your customers, and then apply. Your success rates would be really very different.
Yes.
Very nice, Mr. Goel. At the end, I am thankful to my eminent panelists, Shri Jonathan, Mr. Rohit Goel, and Mr. Surya Prakash. I think you have touched very practical aspect. What we are talking about, how a startup can be helpful, how the green financing solution can be there, and how the venture capital can play important role for financing. It is also discussion, there is no dearth of the funds. Funds are available. And the question is the viability of the project. If your project is viable, you can have the growth, you can have the funds. Even venture capital, even the banker are giving it to startup also loans. That there is no restriction for the banker that they cannot fund to a startup. I think we are on behalf of Research in India and myself, I'm thankful to my eminent speakers. I'm also thankful to my participants who always obliged. For this webinar, more than 700 sessions are with us. Beside the YouTube and Facebook and other electronic media, people are listening to you. I think this webinar proves to be useful for the listener, for our entrepreneurs, for the bankers, and for our member of the associations for that. What we are talking about the research in India, we are a merchant banker, we are investment banker, we are preparing the DPRs, draft project reports, we are conducting the technical, economic, viability study, and insolvency. And above all, we are also giving training to the banker and to the PSU, and we are holding most of the webinars. For researcher under the researcher banner, this is a 139 webinar. Besides, we are having the under the association banner, we are having so many webinars. So we are thankful to all the participants, all the eminent speakers, and our team of screen team, Mr. Rohan, Mr. Joginder, and other IT people, and who had drafted this webinar, Mr. Chaudhary and other people. We are thankful to you, and I feel that you will cooperate with us in our next webinar. If you feel any type of webinar to be hold, because we hold a different type of webinar, either we are talking about the SME or infrastructure, even all the budgetary provisions, we also talk to them. And financial aspect, how to assess the working capital limits, other thing we are also talking to these people. So at the end, again, on the case of reputation, I'm thankful to my eminent speakers. With this, I close the session and participant, please, any think we have not touched. If you have any question to us, you can write to us. So we will try to reply your questions also. Thank you very much. Thank you.
Thank you.
Thank you, everyone.
Thank you very much.
Yeah.
Thank you.